For years, China has reigned supreme as the global luxury market's crown jewel. Its burgeoning middle class, insatiable appetite for high-end brands, and sheer market size have fueled the industry's phenomenal growth. Luxury brands, from fashion houses to car makers, have consistently looked to China as their primary engine for expansion. However, the winds of change are blowing. Recent data suggests a slowdown in China's luxury market, sending ripples of concern throughout the industry. This shift has sparked widespread debate and analysis, prompting experts to dissect the factors at play. Understanding the dynamics of this crucial market is paramount, as China's influence on the global luxury landscape remains undeniable. The stakes are high for both established players and emerging brands vying for a slice of the Chinese luxury pie. As the market enters a period of flux, deciphering the forces shaping its trajectory becomes crucial for navigating the path ahead. The global luxury sector is facing headwinds, with growth rates experiencing a noticeable dip in recent times. While the industry has enjoyed a period of unprecedented prosperity, the current climate reflects a more cautious outlook. Several factors contribute to this global slowdown, including geopolitical uncertainties, inflationary pressures, and supply chain disruptions. The ongoing conflict in Ukraine has cast a long shadow over the global economy, impacting consumer confidence and spending patterns. Rising inflation, fueled by supply chain bottlenecks and increased energy costs, has also taken a toll on discretionary spending, including luxury purchases. These global challenges are inevitably felt in China, albeit with unique nuances and implications for its luxury market. China's luxury market has long been characterized by its dynamism, experiencing periods of rapid growth followed by adjustments and recalibrations. This market, known for its unpredictability, has seen both meteoric rises and sudden slowdowns, reflecting the broader economic trends and consumer behaviors within the country. The past decade has witnessed an unprecedented surge in luxury spending, driven by a confluence of factors such as rising incomes, increased urbanization, and a growing desire for status symbols. Chinese consumers, particularly the younger generation, have shown an increasing appetite for high-end goods, from designer clothing and accessories to luxury cars and fine jewelry. This surge has been fueled by a burgeoning middle class and the rapid expansion of digital platforms that make luxury goods more accessible. However, recent data paints a different picture. According to Bain & Company, luxury sales growth in mainland China slowed to a mere 1% in 2023, a stark contrast to the double-digit growth rates observed in previous years. This deceleration has raised concerns among luxury brands and market analysts, prompting a closer examination of the underlying causes. This slowdown is particularly significant given that China has been the primary engine of global luxury market growth for the past decade. The country's economic policies, consumer confidence, and changing spending habits are all contributing factors to this shift. The luxury market's reliance on Chinese consumers means that any fluctuation in this region has a ripple effect on the global stage. This shift from boom to a more subdued phase highlights the evolving dynamics of the Chinese luxury market. Factors such as economic uncertainty, regulatory changes, and shifts in consumer preferences are playing a crucial role. Additionally, the impact of the COVID-19 pandemic cannot be overlooked, as it has altered shopping behaviors and priorities. This evolving landscape presents both challenges and opportunities for luxury brands. While the slowdown may seem daunting, it also offers a chance for brands to reassess their strategies, innovate, and connect more deeply with their consumers. Understanding the reasons behind this slowdown is crucial for brands seeking to adapt their strategies and maintain their foothold in this crucial market. As the market continues to evolve, staying attuned to consumer trends, leveraging digital platforms, and offering personalized experiences will be key for luxury brands aiming to thrive in China. The future of China's luxury market remains promising, but it will require agility, innovation, and a deep understanding of the local consumer landscape to navigate this roller coaster ride successfully. Section 4. The Dragon's Economic Hiccups, Impacts on Luxury Spending. China's economic landscape is undergoing a period of transition, marked by a shift from high-speed growth to a more sustainable and balanced model. This shift is not just a minor adjustment but a significant transformation that aims to create a more resilient and diversified economy. The days of double-digit growth are being replaced by a focus on quality over quantity. While this transition is necessary for long-term stability, it has led to some growing pains, including slower economic growth, a fluctuating stock market, and concerns about unemployment. These growing pains are felt across various sectors, but the luxury market in particular has been notably impacted. The volatility in the stock market has made investors and consumers alike more cautious. These economic uncertainties have inevitably impacted consumer sentiment and spending patterns. When people are unsure about their financial future, they tend to hold back on non-essential purchases. This cautious approach is evident in the luxury sector, where consumers are now more hesitant to splurge on high-end goods. Luxury purchases, often considered discretionary spending, are among the first to be affected when economic anxieties rise. High-end brands are seeing fewer footfalls in their stores, and even those who do visit are more likely to be window shopping rather than making actual purchases. The allure of luxury is still there, but the willingness to spend has diminished. The Chinese government's efforts to rein in excessive borrowing and cool down the property market have also played a role in curbing luxury spending. By implementing stricter regulations and policies, the government aims to prevent economic bubbles and ensure long-term stability. However, these measures have also led to a tightening of disposable income for many, further impacting luxury spending. As China navigates this economic transition, its luxury market is likely to experience a period of adjustment. Brands that have long relied on the Chinese market for significant portions of their revenue will need to adapt to this new reality. This adjustment period will require a reevaluation of strategies and a deeper understanding of the evolving consumer mindset. Brands need to be prepared for more price-conscious consumers and a shift towards a more discerning and value-oriented luxury consumer base. The future of luxury in China will likely be defined by a balance between exclusivity and accessibility, with brands needing to offer not just products but experiences and value that resonate with a more cautious, yet still aspirational consumer. Section 5. Shifting Sands, Social and Political Undercurrents. In this section, we delve into the intricate web of social and political factors that are subtly yet profoundly influencing China's luxury market. Beyond the obvious economic factors, there are deeper social and political undercurrents at play that are shaping the landscape of China's luxury market. These undercurrents are not always visible on the surface, but have a significant impact on consumer behavior and market trends. One of the most notable influences is the government's ongoing anti-corruption campaign, which was launched in 2012. This campaign has had a noticeable impact on conspicuous consumption, as it targets the lavish lifestyles and extravagant spending of officials and wealthy individuals. As a result, many officials and affluent individuals are now more cautious about flaunting their wealth. This has led to a decline in extravagant gift-giving and ostentatious displays of luxury, as people seek to avoid drawing unwanted attention to their wealth. In addition to the anti-corruption campaign, there is a growing sense of nationalism and cultural pride among Chinese consumers. This sentiment is influencing their preferences and purchasing decisions as they increasingly seek out products that reflect their cultural heritage and national identity. Chinese consumers are becoming more discerning and are drawn to local brands and products that resonate with their cultural values. This shift is particularly evident in categories such as fashion, beauty, and accessories, where local brands are gaining significant traction. The rise of local brands is not just a trend, but a movement that reflects a deeper connection to cultural roots. Consumers are now more inclined to support homegrown brands that offer unique designs and quality products which align with their sense of identity and pride. These social and political dynamics are reshaping the luxury landscape in China, prompting both international and local brands to rethink their marketing strategies and product offerings. Brands are now focusing on creating culturally relevant products and experiences that resonate with Chinese consumers. The days of relying solely on foreign-sounding names and Western aesthetics are fading. Instead, there is a growing appreciation for Chinese aesthetics and cultural elements in luxury products. This shift is evident in the increasing number of luxury storefronts with Chinese names and the rise of new local luxury brands. To succeed in this evolving market, brands need to demonstrate cultural sensitivity and engage with Chinese consumers on their terms. This means offering products that align with their values and aspirations, and creating marketing campaigns that reflect their cultural identity. By doing so, brands can build stronger connections with consumers and thrive in the dynamic Chinese luxury market.